Now, as a 31-year-old dividend growth investor with hopefully many investing years ahead of me, I'm investing heavily in high-quality dividend growth ETFs like SCHD ETF, because although SCHD ETF does offer around a 3.5% starting yield as of today, this ETF specifically offers the potential for massive dividend growth on the line, so more or less I'm not going to reap a lot of the benefits from SCHD for a few years now. And although I definitely want my portfolio to be made up of different ETFs like SCHD, there's also the other half of my dividend investing strategy, which is seeking higher income potential from day one, which is why I invest heavily in higher yielding ETFs, only high quality ones though. Now in this video, I'm going to share with you 3 different high quality, high yielding dividend ETFs that I've been buying like crazy as of recently, and these ETFs are boosting my dividend income on a monthly basis substantially. So if you want to dig into the 3 different ETFs that I've been buying like crazy over the last few weeks, make sure to stick around, drop a like down below, and let's get right into the first one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first higher yielding dividend paying ETF that I've been buying like crazy over the past few weeks, and I'm going to continue to build out a position most likely for the next few months at least, is ticker symbol SPYI, or the NEOS S&P 500 high income ETF. Now this ETF buys into the constituents of the S&P 500 and utilizes a cover call option writing strategy. Along with that though, SPYI also sometimes buys SPX options in order to capture some upside potential if the market turns bullish, which I absolutely love. Now the reason I love that is because most of the income focused cover call style ETFs across the board, things like qyld, jepi, or others, are more or less SOL when the market turns bullish because of course that cover call overlay, meaning that the upside potential is definitely going to be stunted. But SPYI strategy definitely changes that, and I'm going to be honest, that was the main selling points as far as this ETF goes for me personally. Now this ETF over the last year is up 2.35%. Yeah, I get it, it isn't up all that much. A lot of other ETFs are outperforming this ETF as far as price return goes, but this ETF offers a massive dividend yield, which we're going to go through in a second. SPYI does have a fairly expensive expense ratio at 0.68%, but again, if you sort of see some of the benefits in more of these actively managed ETFs, sometimes you can get past the more pricey expense ratio, and I definitely have. Now, of course, this video specifically, we're talking about dividend income. Like I said, I don't only buy high yielding ETFs for my portfolio. Heck, I buy a ton of SCHD every single day and have for years now. But to be transparent, the other side of my dividend investing strategy does include buying cash flow and assets that also offer the potential for upside, but most importantly, offer cash flow. SPYI specifically has a 12.03% trailing 12-month dividend yield. And although this ETF is relatively new, there is a bit of history to go off of. This ETF has paid right around 49.50 cents every single month on time since this ETF's inception. Now, I love the fact that NEOS management also does their best to give investors a very consistent amount monthly, because with these cover call style income style ETFs, a lot of times if volatility is mixed up or maybe lower, the dividends some months can be small, some months be much larger. But I like the fact that SPYI NEOS management definitely tries to even it out and give you the same exact amount more or less every month. Now, like I said, every day or so I've been grabbing maybe 1 or 2 shares of SPYI with whatever cash balance I have around in different portfolios of mine. And what's great about that is, let's say I buy 2 shares of SPYI, that's going to basically more or less, of course, guarantee me an extra $1 or so in forward monthly dividend income next month. So if you are in the search for some higher quality dividend income focused ETFs with very interesting high quality strategies, definitely check out SPYI if you haven't already. The next higher income cover call style ETF that I've been buying a ton of, which is also going to be raising my dividend income substantially month over month, is none other than SPYI's brother or sister, another NEOS ETF. This one is QQQI. Now this ETF, unless I'm missing something, basically is the same more or less from what I've seen of that of SPYI, but instead of the S&P 500, this ETF of course uses the Nasdaq 100. Now, because this ETF tracks the Nasdaq and of course sells covered calls and NDX, this ETF generally speaking will be able to offer even more yield for investors because the premiums are most likely going to be juicier. But before we check out the dividend, the expense ratio for QQQI is the same as SPYI. 0.68%, which we talked about, is on the higher end, but if you find value in the ETF, maybe it's worth it. This ETF also pays a dividend monthly. Like I said, it's basically mirroring that of SPYI. Besides, it's not S&P 500, it's Nasdaq. Now in the max time frame, this ETF is actually in the red, but not to be afraid, this ETF is brand new. There's not all that much data to go off of. So this is going to be one that I'm going to buy a little bit slower of because again, it's brand new. I want to see how it trades for a few more months. Now the holdings are Nasdaq 100, like we said, they sell covered calls on Nasdaq. And by doing so, this ETF has been able to offer, at least so far, again, it's early, but somewhere around 12, 14, 15% yield for investors, which is massive. We're talking around a 60-cent dividend monthly so far for investors for an ETF that costs around $49. Like I said, I'm not going to be buying this one in any bulk manner, but I definitely am going to be grabbing a few shares of this one, adding it to my portfolio, and boosting my dividend income substantially, effortlessly. The last higher yielding ETF that I've been buying a few shares of as of recently, and most likely am going to continue to buy some more, is FEPI, or the Rex FANG Innovation Equity Premium Income ETF. Now this ETF is super interesting to me because it does offer sort of more of a curated list, all super high beta for the most part, and names that offer a ton of juicy premium if you are of course selling calls. Now if you want more diversification and want to have exposure to the entire Nasdaq 100 index, then maybe FEPI is not for you because you're only going to get around 70 or so holdings within this one. But again, because of the cover call overlay, this ETF should have a lot of downside protection, at least in most markets, unless things turn really ugly. Now since October 2023, which again is not all that long, this ETF is also new. The ETF is up as far as price return 2.65%, which isn't bad whatsoever because when I show you how much this ETF yields, you're going to go crazy. The ETF has a 0.65% expense ratio, so basically similar to that of SPYI or QQQI. And as far as dividend goes so far, for an ETF that costs around $50 per share, around 52 I guess, this ETF has paid so far to investors around $1.10 to $1.20 per share per month, at least so far. Now the lowest dividend since inception was just paid in April, so once again with these newer ETFs, I really would never buy a ton of them unless they are around for a year, maybe a year plus, just to have more data to go off of and just to see how they trade long term. But regardless with how much this ETF has paid to investors so far in the form of dividends, again with where the price is at currently, we're talking like a 16, 17% yield. And of course, correcting me if my math is wrong, but somewhere around that range, which is massive. So I can't speak for everyone, but if I buy into an ETF like FEPI, for example, and if it trades sideways, and even if it only moves up around 2% per year, if this ETF was, for example, to pay me around $1.10, $1.20 per month per share, which is well over a 12 or 14% yield, I would not mind holding on to this one whatsoever. So there we have it, guys, 3 different higher yielding ETFs that I think could be buying opportunities for those investors out there like myself that are looking for some exposure to some higher yielding assets that once again are relatively high quality. Now for some of the newer ETFs out there, it's going to take some time to see how they perform, how the management handles and trades throughout different markets, etc., etc. But I think certain higher yielding ETFs that offer high quality strategies that you believe in are definitely worth adding to your portfolio if of course it's exactly what you're looking for, and of course if it matches your strategy moving forward. But now that we went through those 3 higher yielding ETFs, I want to hear from you guys down below. Out of the 3 that we went through, we of course talked about SPYI, one of my favorites, QQQI, also one of my new favorites, and FEPI, one of my newest holdings. Out of those 3 specifically, if you were for whatever reason only able to hold on to one, which one would you buy and why? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.